Hello everybody, welcome to this market analysis webinar with myself, Jasper Lawler, representing London Capital Group. So as a reminder, this is our weekly market analysis webinar where we cover the major markets traded by LCG clients. That includes Forex, indices from the US, Europe and Asia, and commodities including gold and oil. If there are some extra markets that you would like me to cover, please let me know. If you're watching this live, I can obviously respond. If you're commenting on YouTube or elsewhere, you can obviously give me a request for the following week's webinar. Let's skip gears to the trading platform. So as you can see, I'm kicking things off here with the euro against the dollar. We've had a pretty steady downtrend. Not often you get a nice clean trend line like this, but that's where we find ourselves. And you can see that as of late, yes, on a slightly longer term basis, we are downtrending. But you can see in this shorter term, where I put this blue rectangle, we're actually more in a range-bound environment. And that's why I suspect that having stalled a couple of times at just above 109, finally breaching 109, then bouncing back up to 110 again, I suspect that this neat downtrend may be coming to a close, at least moving into a more choppy sideways environment. And so this highlighted MACD is a potential reversal, an inverse head and shoulders pattern potentially here with obviously one neck a head and another neck, another shoulder, sorry, and then the zero line being the kind of neckline. So much like with the downsloping trend line, the MACD is not confirmed a reversal yet. We are still in a downtrend, and so hence we think probably somewhere in the vicinity of this downtrend line we do get another little dip, but potentially it doesn't go as low as 109. And if this thesis of a trend reversal is true, then in fact we're going to see some topside here, and I think potentially a break above 111. What could cause that? Well, potentially a bit of euro buying just off sterling selling, if we're looking at a euro sterling cross. The other potential is that we do have Federal Reserve minutes this week, and so if those minutes turn out to be a little bit more on the dovish side, or at least the reaction in markets is via dollar selling, then the euro can be a beneficiary of that. We've had a lot of soft European economic data. Maybe if we get a positive surprise on the eco data front, that in itself might also be a reason for a little pop higher in the euro. We think maybe this is just basing out here because now we finally had the announcement of QE. QE actually begins next month. So in the meantime, maybe the euro in for a little kind of pop higher, a little relief rally if you like. Let's switch gears to the British pound. So obviously Brexit front and centre. If we don't get a deal announced, you'd imagine that creates a bit of a negative pound reaction. We think that could drop potentially below as 121, but much like the euro, maybe we don't actually get down to these sub 120 levels we'd previously been in. This is a daily chart, obviously, as a reminder. You know, the pound's really suffered of late, but we did get that bounce back at the start of the summer. Now we've been retrenching a bit as the chance of Boris Johnson's deal making it before the 31st of October seems to be diminishing. But if there is some chance of a deal, maybe we get a rebound at 121. We think probably more likely is that the pound can get some kind of relief just because Boris Johnson is forced to announce an extension. And so that at least, although it adds to the long-term uncertainty of the UK economy and what it does about Brexit, at least relieves some of the short-term uncertainty, and so get a little bit of a relief rally potentially in the pound. So maybe it doesn't even have to get down to 121. 122 was the previous low here, and we can see we kind of this 200 pip range here is where we've been getting rebounds from. So it depends what the news flow is this week. The rumor on the street is that Emmanuel Macron, the French president, told Boris Johnson that the EU could reach a decision on the Brexit deal as soon as the end of this week. Let's switch gears to dollar yen. So again, a downtrend of late with a decent pop higher in the short term. Normally you see this pair trending lower alongside stock markets. Actually, it's not had the same kind of rebound this year that stock markets did. Actually, it's kind of a signal, if you like, that maybe stock markets. So one of the two is happening. Either stock markets have to catch up with the currencies, or the currencies have to catch up with the stock market. We think probably this dollar-yen pair has a bit more downside to go, and looks like a bit of a double top pattern in here. So if this is the double top, and we breach the neckline at 107, actually we don't get much above 107. We potentially target 105 if we're looking at this as being the top part of the range, and then this being the bottom part of the range. Then what we can do is try to at least drag this down here, and then that gives you something along the lines of a target, something around the 105.50 level, potentially a downside target here if this double top is to be believed, but again, maybe not taking out these lows. Let's switch gears to indices. Okay, let's switch gears to Brent crude oil. This is a very choppy market at the moment. As you can see, this is the gap higher that we had from the Saudi drone strikes. We've given up all those gains and then some, probed the lows just above 55. So this kind of what we're dealing with here in terms of potential double bottom. If this is going to be some form of bottom, what we think probably we need is a pushback above this rising trend line here, kind of something along here seems to be defining the closes better, but you could draw something along these lines, which takes us to around the current levels, a bounce up through here, show some strength, maybe pull back from the moving average to subsequently bring us somewhere back towards the trend line, and a final push up back towards the kind of levels we were dealing with in the wake of that Saudi drone strike. So back into the 65 area, just assuming that we're basically in a general range trading environment rather than a trend. If I just update my template here, you can see that basically when the MACD is going from negative to positive to negative again, it's basically a sign that we're not really in any kind of consistent trend line, unlike maybe this period of time where we were, we had a long period of time in negative territory. This was a decent downtrending period here. We're not really in one of those at the moment. It's getting a bit choppy. So basically, trading on the assumption that this actually the bottom of this range will hold. If it gives way, obviously we'll have to change our view. This is the gold market. Basically, the opinion that we're probably looking at a head and shoulders pattern here with left shoulder, head, right shoulder. We've broken the neckline. These things can often be choppy. So, as the textbook would say, we had the break, and then this would have nullified the pattern. But actually, we think probably, these little highs here are probing into that original sell-off from up here. So actually, this was all quite consistent with still the head and shoulders pulling off. And again, maybe I can use a trend line, can be a bit easier. If we use something along these lines as the target, it kind of brings us down to this 14-15 level, which is into this previous range down here. Let's have a look at the indices. We'll go to the FTSE 100. Can't see so much from here, but if we zoom out a bit, 7,000 has been major support. This recent rally hasn't got us anywhere near to the previous peak. We've not made a higher high. In fact, we can continue to press against the floor, but the ceiling, we're not getting back up towards it. So this leg lower to us would suggest that we're going to see another bout of selling and eventually take out that 7,000 level. But for the time being, we could look for any bounces into previous support turned into potential resistance as an area to sell in towards the 7,000 level. So it could be these couple of lows here as a potential first area. If that doesn't work out, if you look at the weekly chart, you can see that actually we had a series of weekly closes through here, through this kind of level, and then eventually just saw a big breakdown through it. So if we can get back up through there, it's something in this kind of, basically towards the top of this little bit of range. In terms of numbers, we're looking at around 7,350. 7,350-ish, potentially another area of resistance if this sell-off is going to see a continuation. Through 7,350, we can probably assume maybe we've seen another bottom, and we are in fact going to test up to the highs, but that's not our assumption for the time being. Germany 30, our proxy for the DAX. Again, if we zoom out a bit, we can see that we basically tried to break above this 12,500 level on 3 major occasions. Looks like it could be a triple top or head and shoulders of some form with that big sell-off through what was quite a big pivot area in the past. So if we can get back up towards that pivot, then actually that maybe could be the area that the market resumes its sell-off. And we can start, for the time being, assume this isn't some major top where we're going to actually challenge those 2019 lows, but at least just assume that we're going to challenge these interim lows around the sort of 11,300 mark. So if you do get a bounce up towards this resistance and we start to see some selling, this would make sense as a first area to TP. Now let's just have a look at this Wall Street chart. You can see that we've got a potential rising trend line through here, which goes somewhere to explain this recent rebound that we've had. Nonetheless, something of a double top up here. Of course, higher lows rather. Should in theory be a positive, but I think in this environment we're more in a kind of range bound situation. We failed at the previous peak. Okay, potentially this is a low and potentially we rip up into new record highs, certainly a possibility. But before we get to that, certainly going to be watching these recent lows through here. If we get some sort of failure at these lows, then I think we actually do target the bottom of the range, basically with the idea that we're still in this trading range and indeed through that rising trend line. Okay, so thank you very much for watching the webinar today. Hope that was of some use. And of course, if you do like these videos, make sure to follow LCG on YouTube and social media. Thanks a lot, everyone. Jasper signing out.